Hello, welcome back to the Collapse Life podcast. I'm your host, Zahra Sethna. As we've said before, this is not an economics podcast, and we're certainly not here to give financial advice, but we do spend a lot of time thinking about and talking about the uncertain economic times we're in. We also talk about the importance of securing our food supply and how being disconnected from knowing where our food comes from puts us all in danger. So today's guest, Chris Rawley, brings the power of economics and farming together. Chris is the founder and CEO of Harvest Returns, a platform for farmland investment. And today we'll hear about how and why he started the company and the gap it's filling in our increasingly globalized and centralized food system. We'll also hear about how, through efforts like his to support farmers and ranchers, we're creating a more resilient system to provide a much needed boost not only to our national food security, but also to our economy. Chris, thanks so much for coming in and talking to us today.
It's great to be here, Zara. Thank you.
Welcome. I'm looking forward to diving into the details of the company and how it works. But I think we
Mhm.
want to start with a bit of a macro view. America is looking at some turbulent economic times ahead for sure. And we've had guests on this podcast before who have helped people understand a little bit how to preserve wealth through things like precious metals or investing in Bitcoin, for example. So explain to us from your perspective how farmland fits into that. And isn't farming something that people consider inherently risky given location, crop types, weather variability?
Yeah, I'll answer the second part first. There's certainly risk in farming, like any investment. There's ways to mitigate those risks, right? There is that risk of weather and droughts and disease and variability and commodity prices and all those things for sure. The way we look at it is we try to invest in operators that are mitigating those risks, and whether that's with crop insurance or just the professionalism and the experience that the farming operator has, or hedging, or there's any number of ways to mitigate those risks to agriculture, just like there are in other sectors. As far as why we do this in the macro, there's some trends that drive our sort of thesis for investing in agriculture, and I like to talk about numbers 20, 30, 40, and what that means is the globe's population is about 8 billion people right now. 2050, that's supposed to jump by about 20% to 10 billion people. At the same time, water consumption continues to increase. It's increasing at a rate faster than population. So that's increasing about 30% over that same time period. And there's a lot of reasons for that. Part of it is because just human development tends to drive extravagant spending on things like golf courses and swimming pools and those sorts of things. And as populations become wealthier, they consume more water. And that same factor is driving that number 40. 40% is the amount of calories that will need to be produced, food calories that need to be produced according to the USDA, to feed that world population as it grows. So essentially, the calorie consumption is growing twice the rate of the population. Well, why is that? As the third world develops, those countries get richer. They tend to consume more calories and more protein specifically. So we're in a situation where we're going to have to produce farming is going to have to produce more calories on less farmland with less environmental impact. And so specifically here in the United States, that we see that we live in a very globalized agriculture system. And that's, there's some benefits to that. You can go into a grocery store and buy exotic fruits and vegetables 365 days a year that you shouldn't be able to buy because they don't grow in certain climates. And we import them across the ocean. We either fly them up. Grass-fed cattle, that's something that we in livestock, we do a lot of. Most people don't understand that we import about 90% of that from Australia and New Zealand. Yet at the same time, we have all this wonderful grazing land that's underutilized in the U.S. So why are we shipping cattle, live cattle, and cattle carcasses across the ocean when we could easily be producing it here in the U.S. for domestic consumption, domestic food security? So all those sorts of factors are reasons that drive why we're in this business and why we think it's a good business to invest in.
And how long have you been doing harvest returns?
Yeah, so I started this company with Austin Manis another military officer. We both have kind of that background. We both traveled a lot. We started back in 2016. We both traveled all over the world. We've seen what food insecurity looks like, and it's not pretty. And part of our thesis for doing this is to produce a more sort of robust and resilient food system in the United States.
So, what changes have you seen in the time that you've been doing this since 2016? I believe that actually farmland and the number of farms in the country is actually on the decline, isn't it?
It is. I mean, farmland, especially if it's kind of in a suburban area, it's in the path of development. So arable farmland continues to decrease as people see the highest and best value, at least now, is housing developments and things like that, and golf course and things like that. So that farmland's getting sucked up. We also see a little bit more innovation in the way food's produced. So we've seen a lot of controlled environment agriculture. We can talk about that
Mm.
later, kind of coming. That's an interesting trend that's got some really great positives and some negatives. We've seen kind of a resurgence in kind of traditional farming methods. So this is non-use of chemicals, organic farming. We like regenerative grazing, and regenerative grazing, it sounds fancy, but it's essentially having cattle mimic what the bison were doing in North America, hundreds of years ago, for thousands of years, where they're kind of intensive grazing. They go and they graze across a piece of land rapidly, and then the rancher moves them to another piece of land. They let that land rest. So none of this, that sort of thing is not groundbreaking or innovative because it's natural, but we think it's really important for producing that food and producing it domestically.
Hmm. So, I mean, another way of investing in agriculture would be to buy land and rent it out
Hmm.
to a farmer. How is
Yeah.
what you offer different from that, from a risk and reward perspective?
Yeah, so great question. There are other platforms out there. We consider them complementary to what we do, sometimes competitive, but you can go out and essentially invest in a piece of farmland. There's publicly traded REITs that are or farmland REITs where you can buy some shares of stock, and those shares go out, or those companies go out and buy up large tracts of farmland. Yeah, that if you just want exposure to the asset, I guess that's fine. Things to think about are who is actually farming that land. Generally, it's the corporation owns it, the investment corporation owns it, and the farmers are tenants. So we're a
Mm.
firm believer in investing in the farmers themselves. The United States, a good example, back when our country was founded in the late 18th century, over 90% of of citizens were somehow involved in farming. They were
Mm.
farmers. They were in the farming economy. Now that situation is completely reversed, and less than 2% of Americans are farmers that produce that food for the rest of us, not just the rest of us, but for a large portion of the world for export. So we're all for shaping our investments so that farmers can own their own land, have their own security. In many cases, we're in situations where the land has been in somebody's family for multiple generations, and we want to help them hold on to it. So we create situations where farmers get access to capital that they may not be able to have. They're, in a lot of cases, farmers are land rich but cash poor. So if we can bring in capital from our investor pool to help them hold on to that land, either in the form of loans or equity. So, the bottom line, the short answer to the question is that we're investing in the actual farming companies themselves, not just the land.
Hmm.
And that's important from our perspective to help those farmers hold on to and have control of their operations.
So, how does it work in practice?
Yeah, so what happens is farmers and ranchers come to us, other agribusinesses. They need capital to expand their operation, occasionally to start new operations, and we kind of underwrite those deals. We look at the risk involved, as I mentioned earlier. We put them in front of our investors. We have a pool of about 15,000 investors that grows every day, and they decide how much they're going to invest. Whether that's 10,000 or 15,000 or 200,000, they invest in those farming ranches. We pool those investments together, and then we write a check to the farmer essentially. And then they take that and they go out and they buy new land, they buy new cattle, they buy new equipment, machinery, processing facilities, whatever they need to grow, or marketing, salespeople to help sell their produce. And we do all that in flexible and creatively much more so than what a traditional ag farming credit system has done. We've been told by a lot of farmers they like working with us just because we're a little bit more creative in the way we do financing versus traditional ag banking.
And if I'm interested in investing, is there a one-to-one relationship between the investor and the actual agriculture enterprise that I'm investing in, or does it all just go into a pool and then you decide where to allocate?
So we have a debt fund that, essentially the investor gives us money, we pool it and provide loans. But our more traditional way, and the way we've been operating since the very start, is we bring an individual project in front of our investors and they decide what to invest. So although we help put that offering together and manage it as a pooled entity, our investors are able to know exactly the farm family they're investing in, or the farming company they're investing in. They can go out and visit it if they want to, if it's feasible geographically. And so they do feel more of a connection to what they're actually investing in. We encourage those of our companies that sell sort of direct to consumer, whether that's meat or produce or whatever the products are, we encourage the investors to try before they invest, so they can actually taste those products and then decide to put their capital to work in supporting that farming company.
Amazing. So I want to get back to something that you sort of hinted at before, and that's how few Americans are now actually farming anymore. And so we had the distinct honor of being able to speak to Joel Salatin, who you probably know is a legend in the sustainable food movement. And he's been fighting against factory farming and the big ag industrial farming for years. And so I just wanted to talk a little bit about that. And from the 1970s on, we had the Secretary of Agriculture, Earl Butz, famously saying, go big or get out. So that's kind of the direction we've been heading in. And how do you kind of position yourself in that space to make sure that you're not investing in kind of more of the same?
Yeah, I mean, it's twofold. We're definitely investing in small to mid-sized farming companies. Most of these companies, even though maybe they've had the family acreage for a long time and they may be making good money, they're competing with those large industrial companies. We're a firm believer in creating more farmers, and the best way to do that is to give them the asset that they lack the most, which is capital. So these small farmers come to us. USDA has a very well-established agriculture sort of financial guarantee system and insurance system, but it revolves around the farm lobby, which is mostly driven by row crop producers. So that's corn and soybean producers, and that's the way the ag finance system is optimized to support those folks. And there's nothing wrong with that. Large scale conventional farming is important to some respect, but if you're a smaller farmer, if you're a cattle producer in the Great Plains, you don't necessarily have access to those same kind of resources, capital resources, as that Iowa corn farmer who's got the entire corn ethanol lobby behind him. So we like to help support. It's not necessarily the underdog, because we want strong companies that we're investing in, but in order to give them a little bit more economic power, they need some capital, and so we help their first time farmers or the smaller farmers or the third generation young farmer who might have access to family land but doesn't have any capital to go out and buy 100 head of cow. We want to support those folks.
Right. And also just having that independent source of capital allows them to make choices on how they manage their agricultural entity, which maybe if you're taking the government subsidies, you're sort of locked into particular pathways, right?
100%. Yeah.
So when the farmers come to you with their investment opportunities, what kind of criteria do you use to vet those? Do you look at things like animal welfare? Do you look at their chemical inputs, or do you have a list of criteria?
Yeah, so that you kind of two sort of factors. Animal welfare, there's some ratings for that. That's important. It's not the only criteria when we're dealing with ranching. So sustainability, we're biased towards those. companies that are making less of an impact on the environment. Certainly, that's important. We don't want to see large scale chemical runoff dumping in, creating red tides. You see a lot of that in kind of your Midwest row crop farming, unfortunately. So that's a factor, but from the financial aspect, we're looking at a couple different things, or a few different things. One is the experience of the farmer, his or her team, the resources they bring to the table from not just an agronomy standpoint, like, hey, do they really know this how to produce, to grow whatever they're growing or raise whatever kind of animal they're grazing, but also some business acumen. And that may not be necessarily resident in the farmer. It might be the team they bring to the table, whether CPAs, accountants, business advisors, company advisors, things like that. So that's important. We're looking for, have they identified the risk in their business and identified the best ways to mitigate those, and have the business plans in place to mitigate those. And then of course we're looking for what do the numbers look like? What is their ability to either repay debt or to grow the company if it's an equity investment, and produce a return for the farmers. That's obviously that's where the name of our company is based on. They create that harvest and produce returns for our investors. And so what's their ability to execute on that? And it's a number of factors, and it's some are very financially quantifiable, or others are a little more subjective. And the longer we do this, the better we get at kind of seeing those patterns, recognizing the patterns of what will be a good investment, who makes a good investor, and we do our best. It's not always, doesn't always work out 100% the way we want to, but a lot of times it does.
And so you have the farmers kind of approaching you saying, this is the project I'd like investment in. How many of those do you get in, and how many of them do you accept? What's the kind of ratio look
Yeah,
like?
that's a great question. So we get probably 25, 30 inquiries a month. And of those, only about 5% actually make it onto our platform in front of our investors. And there's a couple of reasons for that. Some of them just don't make it through the vetting process. Many of them we like, but it's just we don't think they're investable, or our investors decide they don't want to commit capital. In some cases, they do well on the platform, but we just don't have enough investors. So we're always trying to find new investors who are interested in this sort of sector. A lot of people just don't know you can invest in farms and ranches, and so that's why we're one of the reasons we're here, and we try to educate people. But it's much fewer get funded than we would like to see, and so at the same time, that said, we do want profitable investments, and we want to make create a win-win situation between the farmers and the investors.
Is there a capacity building piece where someone comes with a proposal that's not quite right for your platform, but you can kind of give them some feedback on how they could strengthen that or make it better?
Yeah, we have a couple of those conversations a week where somebody's got a great idea and they just don't have all the pieces in place. So sometimes we'll tell people, hey, go back and get some outside help, whether that's accounting, professional help. We recently did a partnership with a company called Good Agriculture that does that, and kind of helps get these financial plans ready for us to make them more investable. Sometimes they just need more experience. Sometimes they need to kind of prove themselves, of go out and sell and create a profitable company at the small level you're doing, and then we'll help you get bigger. So it's very similar sorts of things you would see in other businesses and investments, and then it really depends on what we're doing. So we invest in several different things. We invest in farming, but we all invest in agribusinesses, and even agriculture technology companies that are helping create that sort of innovation in the sector, and those are higher risk but also higher potential returns.
How does the platform actually work? I mean, I know there's a couple of others in the space that we've heard of, Farm Together or Acre Trader, two that come to mind.
Mhm.
How is Harvest Returns different?
Yeah, as I mentioned, we're investing in the actual operating company, the farming company, or the farmer, so to speak, versus the land. Pros and cons of that: the land tends to be a stable investment. The returns can be lower than the returns that we're offering. Our debt investments, for example, now might be 12, 14, 16%, whereas land is kind of a slow, steady return. But at the same time, I think we're able to deploy capital a little bit more creatively to bring those more innovative things. We've done vineyards, we've done that grass-fed ranching, we've done agriculture technology companies, we've done indoor farms, both greenhouses and vertical farms, and just a lot more opportunities. We kind of consider ourselves the one-stop shop for investing in agriculture. So there's just a lot of different sorts of opportunities that come across our desk that we want to put in front of investors.
Hmm. And then how does it work from an investor's standpoint? How do they um, participate? What does it look like?
Yeah, so they see these opportunities on our platform. We do investment webinars, so it's something just like this where they get to a question to watch the farmer, the management of the farming company speak live and ask questions, and they can get some feedback on the investment offering directly from the farming company. And then they decide to invest. They go and they've already registered and kind of put together an investment profile, and there's all kinds of things we have to do to be compliant there. And then they decide to invest, and they essentially wire their money. Like I said, we pool the money, then we deploy it to the farmers, and then they are able to see regular updates. We provide the tax documents, and then depending on how the investment's structured, they'll get quarterly payments if it, in some cases, if it's a debt deal, or they'll annual payments, or if it's more of the sort of venture type agriculture technology companies, they'll be able to get that exit, that high potential payoff at the end of the when the company is liquidated or acquired or whatever.
And are there minimum investment levels?
Yeah, so our investments, we operate under what's called Regulation D, SEC rules, and because of that, we're generally offering accredited investors only. Although some of our investments we can do sophisticated investors. That's a definition per the SEC, and our investments start at anywhere between 5,000 to 25,000, depends on the particular offering. But that's for some people that's a lot of money. For other people, it's not much money. But we like, because we're doing these individual farming projects for the most part, people are able to diversify across a number of different farms, number of different geographies, types of investments. They could have a hazelnut combined with a cattle ranch, combined with an ag tech company. They can put 10 or 15 or $20,000 in each of those, and then have a diversified agriculture portfolio with whatever that small portion of their portfolio they're allocating into agriculture and real assets with us.
So it is available to retail investors, not just high net worth individuals.
Yeah, I mean, the definition sophisticated. There are some things that go with that, but yeah, you don't necessarily have to be a super high net worth investor or accredited investor.
Great. And what kinds of returns? What's the sort of range of returns that people are looking at?
Yeah, it varies across deal type. So because interest rates are higher, we've been doing these private debt deals. We've had a lot of success on those, and you might see 12, 14, 16% returns on some of those. On the equity side, it could be higher. It could be north of 20%. And then some of the ag tech companies, the early stage companies that we're doing, they have potential for a much higher. We haven't been doing that for long, so we haven't seen like that blockbuster exit yet. So, but we hope to see those our investors for our investors one day.
Mm-hmm. And how do you go about kind of growing that pool of investors? Is that a hard sell? What kind of questions or pushback do you get from people?
Yeah, a lot of it's education, right? So I love going on podcasts like yours to, reach out to people that aren't familiar with the sector, or maybe kind of curious, but they don't really know how to do it. We do kind of traditional marketing and things like that to just get out, get as many people eyes on our company as possible. And then of course we have to convince them that, yeah, this is something that's worthwhile, important, and can produce you some potentially good returns for the portion of your portfolio that you allocate to this.
Mm-hmm. But you said you have 15,000 investors at this point?
Yeah, I mean, since we started, we've been, we grow at kind of about a 20% steady clip year over year, and people sign up, and some of those people choose to invest, some more than others, and some just like to, I guess, see the deals, and we'd love to be able to take on, that retail investor, that really small retail investor, that $500 or $100 investor. But the sort of SEC compliance rules that we work under for crowdfunding, it's an entirely different category, and just we haven't seen the business model that works there, or we just haven't found it yet. But there might be some in the future where we can take those smaller check sizes.
Mhm. So you had mentioned earlier about controlled environment agriculture, which is
Hmm.
indoor farming, it's hydroponics and aquaponics and
Hmm.
greenhouses and things like that. So it's been lauded as a bit of a sort of a new hope for the future. It's a way to move farming closer to cities where people live, and it's a market that's growing, apparently expected to reach 377 billion by 2032. So talk a little bit about that, explain what it is, and how much of a share of your investments is in this type of farming.
Yeah, I mean, you kind of nailed the drivers for it. The control is the word that's kind of controlled environment is the key word. So you're able to grow crops in climates where they wouldn't normally grow, under the cover indoors, whether that's in a vertical farm that's got LED lighting, hydroponic growing systems. Aquaculture is one we've had some success at, where indoor salmon farming. That's just from a sustainability standpoint, and I'm, as a guy who spent a lot of time out on the water as a naval officer and seen a lot of illegal fishing. A lot of it's Chinese and overfishing and things like that. That it's important to produce that protein in a more sustainable manner. So doing it indoors is one way to do that. It, as you mentioned, producing food closer to where it's consumed. So those are all the good, less water usage, recycling more water. Some estimates are that indoor growing, depending on how you're doing it, consumes 90% less water than field grown agriculture. So those are all the positives. The negatives are people have lost a lot of money in investing in this over the past 5 years. And I'm not talking about us necessarily, although we've had some hiccups and learned some lessons in some of our farms. But VCs came into this sector in a very big way. Venture capitalists, 5, 6, 8 years ago, spent a lot of money thinking these were tech companies instead of farming companies. So they expected them to grow like tech companies, and they put the pressure on them to grow rapidly versus at the speed of biology, and considering all those biological factors and environmental factors when you're growing. And things like they discounted things like electrical
Yeah.
cost. So to put an urban farm in say a place like Manhattan, not only where you have high electrical cost but super high labor cost, doesn't make as much sense necessarily as putting one in a suburban, Tennessee or Kentucky or someplace like that, where the cost of labor is much cheaper, electricity is much more affordable, things like that. It comes down to, we use a term that's become much more popular in controlled environment is unit economics. So, if it doesn't matter how much technology goes into a piece of lettuce, if it costs you 18 or a head of lettuce, if it costs you 17 or $18 to produce that head of lettuce, and the retail price for a head of lettuce is say $3 or $4, that you don't have
Yeah.
a viable business there. So people have slowly started realizing this. The industry's been shaken up quite a bit over the past, say, 12, 24 months. And we're seeing much more realistic business plans coming to us with much more realistic financial projections, risk mitigation, all those sorts of things, cost recognition. So we're still very bullish on that sector. It's just a matter of finding the right companies, the right people to invest in, and not just treating these like they're another tech investment.
Yeah. Can you give us a specific example of a business that's in your portfolio that's doing it in the right way?
Yeah, so there's a company in New York called Local Coho. They're producing salmon. You can go up in fancy sushi restaurants in New York City and eat some of their salmon. But they're in kind of a growth stage now where they're getting past that sort of pilot production, and now they're ready to get more commercialized and start lowering their unit costs. So not only can you buy their salmon in a sushi restaurant. Hopefully someday you'll be able to buy it in larger and more traditional grocery stores and retail places where the cost point is lower. But that's one example. On the indoor side, we're in some other indoor farms with various levels of success. One that we like, if anybody ever happens to be in Omaha, Nebraska, there's a company called Gather Omaha. It's a restaurant with a indoor garden in the basement, so you can go and have a cocktail and watch your lettuce, and then go up and eat a salad, or enjoy the herbs in your dinner that were grown just downstairs. So yeah, definitely that farm to table was at um, 10 feet away from consuming the food from where it's grown. So those are a couple of examples of successful indoor deals we've done. And then, if you want to talk about other companies on the ranching side, all kinds of great cattle producers we work with. Some of them are selling more of that wholesale. A lot of them are selling direct to consumer, and we like that because it allows the farmer to get more margin out of the produce or the animals they're producing. So, one example is a company up in Oregon called Wild Oasis Bison. So we're big fans of bison, all livestock, but bison in particular because it's a Native American animal. And this company you can go and get bison jerky and bison beef and bison steaks. And I personally am I love to eat bison. But it's a very, it's a great animal it's not easy to raise because they don't, they're not domesticated. They're still wild animals. But there's, this Wild Oasis bison owned by a great woman called Lori Moore up and her husband up in Oregon and Montana, where they raise these animals.
And cattle ranching as well, is that part of the portfolio? I mean, we feel like there's a
hmm
bit of a war on beef right now, and then just recently the wildfires up in
Yeah.
the Panhandle have just been kind of another
hmm
stake in the heart of on already an industry that's already on its knees. What are your thoughts?
Yeah. We are very pro animal agriculture in this country. And it is unfortunate that for a lot of reasons, a lot of pretty vapid reasons, honestly, people are against animal agriculture. Some of there, you could get into many, many arguments on why the anti-animal agriculture movement is wrong. A lot of, look at the climate aspects. There's some very flawed UN studies that everybody cites that discuss the climate impacts of animal agriculture that are all based on, basically clearing out rainforests, old growth rainforests in Brazil, and then they extrapolate that into that Great Plains ranching operation in North America, where people are doing it. The environment is better for it, and they're preserving native grasses, and they're raising animals. Essentially the way animals have always lived on those Great Plains, and so there's absolutely no comparison between that large scale environmentally destructive farming in say Brazil versus what's going on here in parts of North America. And whether it's then there's alternative protein. I guess some people, they think there's animal cruelty, but I mean I drive to work every day past ranches that are not far from where I live, and I'm sure in other parts of Texas, people in other parts of the United States, people see the same. You see cattle out there enjoying, especially this time of year, where everything's nice and green, and those cattle are living the life. This is the way they were supposed to live. It's a very they live very good lives, and the ranchers we work with are they value and cherish those animals, and they take really good care of them because they're not only are they concerned about their welfare, but they're an asset,
Yeah.
and they're a financial asset, and so they have to take care of them because it's their livelihood. So these animals are well taken care of. They live humane lives and are processed and slaughtered humanely, and then they become really tasty, healthy, nutritious dishes for people. And yeah, there's the health aspect. That's animal beef in particular has gotten a bad rap from a health perspective, but there's all kinds of studies that contradict the sort of flawed studies that were done in the 1970s that saturated fats and things like that are bad for you. I think beef in particular is one of the most nutritious, nutritiously dense proteins and foods out there you can have.
Yeah, particularly if it's coming from a source where you know what's being put into,
Hmm.
what those animals are eating and what they've been injected
100%.
with and
Yeah.
things like that. So what you're doing, if you're actually targeting those kinds of sustainable ranch operations, that's exactly what's needed to be able to kind of lift this up, or at least preserve
Hmm.
what's left of that kind of agriculture.
Yeah, for sure. And we want to grow those. I think there's more and more farmers that come to us that want to do that. They just don't have the capital or but they see this movement is growing of sustainable animal agriculture and what do you call it, regenerative farming or what there's a lot of different names,
Hmm.
but we're happy and proud to work with a lot of those different farms.
That's fantastic. What are you hearing from farmers and ranchers about access to farmland? We know that we're losing millions of acres every year to urban expansion and to foreign investment
Hmm.
and to people like Bill Gates just buying up tens of thousands of acres. So, what kind of pressure is that putting on small farmers?
Yeah, I mean, I don't follow the farmland market per se extremely closely, but obviously we know a lot about it, and we talk to a lot of farmers that are out there struggling to buy pieces of land because it is kind of frothy right now, that market. Um, Post COVID, the just farmland price per acre, you name it. I mean, but especially that sort of, very fertile soil, the prices shot up because so many investors did come in, so many farmland investors. And so that's why we're kind of not in that segment because we want to help farmers afford that on their own, and not contribute to the increasingly, rapid pace of farmland price growth. But that market will probably moderate like all markets tend to do and revert to its mean. And I think some of those, the 26, $28,000 per acre, there's some statistics like that for Midwest farmland, that will probably moderate a little bit over the next some period of time. I don't know exactly when, and it'll hopefully become more affordable for ranchers and farmers.
You mentioned this already that one of the sort of pillars that you invest in is around technology. So, talk about some of the
Hmm.
trends that you're seeing in agriculture technology.
Yeah, so these trends are being driven by a number of things. One is consumer preference. So consumers want more traceability in their food. They want more sustainably grown food. So um, there's different companies out there that are trying to solve that problem. The environmental impact, controlled environment agriculture being one aspect there, and then just producing more profitable, higher yielding farms. That's been sort of that's been an aspect of technology in agriculture for a long time. So, going back just a couple iterations of farming technology breakthroughs. First, it was the Industrial Revolution, and livestock pulling plows was replaced by steam engines, and eventually, internal combustion tractors. And then in the 1950s and 60s, there was a big technology revolution. Unfortunately, that was the one that brought a lot of higher yields, but it also brought a lot of not great chemicals, herbicides, and synthetic fertilizers. And so that's kind of being reconsidered now. And the technology we're seeing is like sensors out there that are embedded in fields that can measure water content, moisture. One of our tech companies called Rawley, they've got these sensors that can be put in vineyards to measure smoke taint from wildfires. So, the California wildfires, they ended up ruining a lot of vineyards a few years ago. And so, it's rather than having to destroy the entire crop, you can tell which grapes were damaged, and those grapes can be, thrown away with preserving the rest of the crop. So that's one example. They're doing labor. Obviously, the cost of labor is very high. So, and the past few years didn't help that with ridiculous inflation. So we're seeing a lot of technology, whether it's robotics, harvesters, things like that, being brought in to try to solve that problem with labor. And agriculture is a very conservative industry, so it takes a lot for a farmer to adopt technology unless you can prove that that technology is going to help lower their costs, increase their yields, make their lives easier.
Mm.
solve some of their problems. So the companies that we try to invest in are ones that are producing that return on investment for the farmers themselves, and are able to capture a market share from those farmers that are trying to solve these problems.
A lot of times when these technologies are introduced, they're introduced in the guise of solving problems and adding convenience to our lives. But
Mhm.
then there's also sometimes a hidden aspect of data collection, which then potentially could feed into a bit of a sort of a control mechanism of, some nameless, faceless entity being able to kind of monitor what you're doing. Is that a
Mhm.
concern that you have or that farmers express around technology?
Yeah, I think I haven't had those conversations directly with farmers. I think it depends on who is trying to get the technology. Um, I'm personally very wary of the government trying to collect all this technology. USDA, they traditionally have done a good job with collecting farming statistics and crop yields and things like that help, you know, help the commodity markets adjust in pricing and things like that. But I will tell you, this is sort of a tangent to your question.
Mm.
One of the risks that I see in agriculture today is that, regulatory environment. There are some really bad things going on now that are putting farms in jeopardy and farming in jeopardy. That, I don't. It doesn't really matter what the intent of the government is. It's they're creating rules that are not favorable for farmers.
Yeah.
And here's just two examples that I just saw today. One, unfortunately, this one was kind of pushback from the farming is the SEC rule for companies to report their climate impacts, and that was going to filter down to not just like publicly traded companies, but those involved in agriculture and down to small farmers. And that was going to put a major reporting burden on these small farmers. Fortunately, they kind of pushed back, and the USDA, I guess, kind of pushed back against the SEC, and the SEC has zero business regulating, you know, food production. That's ridiculous. They should stick to securities. Um, Another one that was just kind of weird that I saw in this newsletter this morning related to Department of Education FAFSA rules. FAFSA is if your kid goes to college, you have to fill out this ridiculous form. It takes a long time, and that was related to reporting net worth of farmers. So, a lot of farmers, as I mentioned, they're sitting on like land that might be worth hundreds of thousands, if not millions of dollars, but they might be making 50, $60,000 a year. So they're not rich by any means, but their kids are getting penalized on applying for student aid and college aid because they have this super high net worth. So that's an example. So I think, and don't even get me started on the ethanol, lobby,
Mhm.
because they're producing fuel that nobody really wants in
Exactly.
their vehicles, and they're incentivizing these farmers to grow crops that they shouldn't be growing,
Mhm.
and they should be, frankly, I think we should be raising cattle in that, that land, some of that really fertile farmland in the Midwest, instead of growing corn and soy that is not the best food products. But that's, again, all farming is good. Don't get me wrong. Farmers are out there doing their best to grow food and
Mhm.
feed the world. But I think when the government interferes too much, it creates perverse incentives or disincentives for farmers, and that shouldn't be happening.
Yeah, we're 100% in agreement on that. And we could probably spend another hour talking about it, but we'll save
Mm.
that for another day. Um, I guess we're sort of coming to a close. I wanted to ask you if there are any other trends out there that you're kind of excited about.
Yeah, I think I really mentioned them all.
Mhm.
Touched on aquaculture. I just think from a let's just see it. You're a person out there and you're interested in this and you're interested in farming. Do some research on where your food comes from and who produces it, and where you can buy local. Um, you've talked about your previous guests where they encouraged go out and start a little garden and produce some of your own food, even if it's just an herb garden. I'm not a farmer. I don't have a farming background. I've grown a few things and successfully and unsuccessfully, and tried to produce my own. But go to your local farmers market, support those farmers. What's interesting is we found more than one of our farmers by going to farmers markets here in the Dallas Fort Worth area,
Interesting.
where there's a great creamery called Armagh Creamery. They sell raw milk, which is another regulatory thing. Some people like it, and the government doesn't. But they sell this great cream top yogurt, which
Mm.
is the way yogurt's supposed to be made. And they have a farm not too far from our office, about an hour away in Dublin, Texas, and it's just wonderful. And I found them in a farmer's market. Another one, an elderberry farm, Harvest Pharmacy. I found them at a local farmer's market here right by our office. So they're out there, support these producers, know where your food comes from, and
Mm.
if you don't, research it. And you know, there, agriculture is the one industry on earth that affects every single human being because everybody's got to eat. So we should not take it for granted.
No, absolutely. And we should be supporting those people who are feeding us and doing
Mhm.
the best that they can. I mean, we've talked about some of the sort of flaws that have entered into agriculture over the last decades, but farmers themselves really are doing the best that they can. So I give you and all others full credit for supporting that. So, is there a farm you visited that really stands out in your mind? Can you tell us about?
Yeah, I've visited our indoor farms, our outdoor farms, some of our ranches. Um, there's a company out in California that's a regenerative rancher called Perennial Pastures. They basically took California, Southern California is a desert. Most people don't realize that. I mean, it's got beautiful climate, some horrible regulation, but a beautiful climate there in Southern California. So it doesn't get a lot of rainfall, but regenerative farming can help transform that land, help the soil absorb more water, regrow those native grasses. And this guy, Kevin Muno, who owns this ranch, he used to be a professional baseball player. Now he's a rancher,
Hmm.
and he gives ranch tours, and you can go and visit his ranches and eat buy his food at local farmers market or online. And that's a really great one, like that one. Looking forward to visiting again soon when everything's blooming here in the spring.
Hmm. That's great. Well, that sounds like a perfect place to go. And we're so grateful for all that you've shared. How can people learn more about you and follow your work?
Yeah, easiest way is just start at our website, harvestreturns.com. We've got a blog on there, so we try to do educational content. Of course, we're on social media. We're pushing all that out, but just give us a shout, send us an email, watch some of our webinars. You'll learn a lot, I hope, and maybe you may or may not decide to invest with us, but at least you'll learn something and learn how your food system works and doesn't work.
That's great. Chris, thank you so much for coming on and telling us all about Harvest Returns.
You're very welcome, Zara. Thank you.
It's a pleasure. So interesting. What a lot of great information. Folks, if you like what you just heard, we hope you'll share this video with others and also like and subscribe to this channel. Help us expand our reach. Please also find us on Substack at collapselife.substack.com and sign up for our newsletter. You'll get several articles a week and a chance to connect with a community of curious minds on a similar path. We also have a Twitter handle at collapse_life, and we hope you'll follow us there too. Collapse Life is your home for information to open your eyes and take action in your life. We call it a thinking person's guide to civilization and demise. We're so glad you've chosen to be here with us today, and we'll be back next week with another great guest. In the meantime, remember, keep your chin up. It's only collapse. See you soon.